Okay, so good day. I hope you can hear me well. If not, then please raise the hand in the menu. But I think that the sound setup is okay. So I'm Petar Rismondo. Today's presentation is about shopping and the total and the more revenue we can get from shopping and ways to do that. It's also possible for me to speak in German, as I work here at Internet Warriors, and I do manage clients in German. But at the same time, as we are getting pretty technical in this presentation, it would be good to have it in English. So yeah. The questioning part will be at the end. If you have a need, I don't see your hands at the moment as I'm presenting, but I will check every couple of minutes if you said something or if something is unclear. But at the end we will have a questioning part. Okay, so more revenue about shopping, more revenue through shopping. How did we come to this presentation? Well, in the end, it's about our clients and how we were able to raise their revenues and also their profits. As you can imagine, Google Shopping has become pretty competitive, and yeah. Just a sec. Okay, so a bit about me. I'm an online marketing manager here at Internet Warriors. I've been here for almost 2 years. I also did a couple of things in e-commerce. I've got a business analytics degree, a master's degree, studied economics before. So that's BWL in Germany, it would be. I specialize for SEA, Google Ads, search display, shopping, data feed setup, Bing, and so on. Also social media, Facebook and LinkedIn. I like e-commerce, but B2B lead generation is also a big part of my work that I like as well. Currently, I'm getting more and more into data analysis and business intelligence. But yeah, those are some midterm plans. I'm also certified in Google Analytics. So this is the content for today's presentation. First, we will go a bit broadly about the Google Shopping. Then we will show the core idea, and that's how do we get the return on advertising spend per product. We will have a showcasing example of it. We will build this example and then some additional information and a summary. So about Google Shopping, as you know, it's an e-commerce must. At the same time, like 40 to 60% of our customers' revenue is being generated by shopping. The big thing is that the buying intent for a customer is already known. So the customer is deep in the funnel, and therefore the competition is also high because the customer wants to buy. Last 2 years became very competitive since 2018. And therefore we need better insights to keep the channel viable. And today we will show how you can get some of those insights. If you look at the US online retail, then like 76% of the ad spend goes to Google Shopping, and it generates 85% of all clicks. In UK, it's 82 ad spend and 87 of all clicks. So the remaining 12.1% of clicks go on ads and on normal search and display and so on. So the Germany lies in between, and it just shows how big shopping is. If you don't yet have a Google Shopping, all that you need is actually a product that you're selling. It cannot be, well, Google is moving towards offering services through shopping, but it's actually for the physical products or software or something that can be sold. And you need a website with an online payment. If is that Shopify or WordPress or something else, doesn't matter. You need a Google Ads account to build the shopping campaigns. You need a merchant feed. I will, on the next slide, I will describe it a bit further. And you need a web analytics platform. Although, okay, maybe you don't need it, but then you don't get the performance data. You're not able to. You will not be able to know which of the campaigns are actually generating the profit and the revenue. So we can help you with the last 4 points. With the product, yeah, that's you need to have your business idea in any case. We can help you with setting up a website with online payment, and our primary expertise lies in Google Ads account setup and management, merchant feed setup, and Google Analytics setup. If you look at the merchant feed is probably the most complex part for my clients in the least that are just starting with shopping, and it's actually a pretty simple thing. It's a way to send structured data about your products to Google. So that includes price, taxes, delivery, for instance, in Germany, or if you're delivering abroad, and so on. There's at least 20 attributes that you need to add, and it's actually quite simple, and you can do it by a Google Sheet. So a normal Google Sheet that you update every 30 days that has your products. It's enough to set up the basic merchant feed. If you're a bigger e-commerce site, then there will be some kind of a programmatic connection between the merchant feed and your site. And although also these ones are the possible ones, the API, the fetch, the SFTP or the FTP. There's a couple of more, but yeah, these are the basic ones. Although the bigger e-commerce sites can also test the viability of shopping with how do you say it, with a Google Sheet. The problem is once you have more than 10 products and these products go out of stock or their prices change or something else changes, I don't know. For instance, now with Corona, we had the value-added tax in Germany went down. That's something that will need to be implemented in the Google Sheet in order to properly show the information that's currently on the website. So you have actually with the Google Sheet, you've got two different sources of information. One is your web page, and the other one is your Google Sheet, and these two must be they need to be the same on both sides. With API and so on, it's also not that complex, not that complicated. These kinds of, for instance, going out of stock gets automatically updated. Okay, so that's about the merchant feed. Now, to talk a bit more about the core idea. So we went right now about shopping, the core idea of this presentation. So the return on advertising spent per product brings more revenue and more profit to your campaigns. And how do we do it? We do it by understanding our products, optimizing our marketing, activities, and adjusting them. So what does it mean? In order to optimize, to understand, we need to first know which of your products are actually generating your revenue.
And mostly it's that 20% of the products are generating 80% of the revenue. It's a 20-80 principle. It's also, it's called Pareto. There's also another term in economics. But in any case, you can see it in almost all of the companies. For instance, all of my clients have this kind of split, and it can be even bigger. So that, for instance, your one best-selling product may be generating 10 to 30% of your revenue, and if it's a gross, if your gross margin is big, if your profit margin on that product is big, and then it may well be also generating up to 50% of your profit. So the following is needed. We need to structure the shopping campaigns to take advantage of this. We will also see how it goes on the product level, and then we will focus on the right products. So that was the reason why we're doing it. At the moment, as it is being done and how the shopping campaigns are being structured, it's on top of the brand. So you get some attribute and you structure it on top of that attribute. So it's either brand, non-brand, for instance, on top of the search terms. This is not something that we do anymore. There's also the collections. For instance, if you're a clothes seller, a brand, then you can have fall season, male, female, so on. And as a new collection comes and goes live, you can structure on top of it. And for instance, you can go also for the bestsellers. Bestsellers are probably bestseller products. It's okay, but at the same time, it's not taking into account what the gross margin is. Okay. So all of them are wrong because they are not optimizing on the proper KPIs, and they're optimizing for the wrong thing, and therefore overlooking the winner products, focusing on wrong products, and not optimizing for profit. So understand your winners. It's 5 to 20% of your product selection. They have the following attributes. They are sold in high quantities, have high price points, have high profit margins, and are high potential. So for instance, when I say they are high potential, it can be also that it's a new product, so you don't have the KPIs, but the size of the market that you estimated is big. So high potential in that sense. And also what's really interesting, the winners can vary per channel. So if something is being sold well in brick and mortar, in retail, offline retail, it doesn't mean that it's the best product for online. So keep that in mind. Although it's always good to see if some of the offline products, so offline winners, to test out and to analyze why they are not functioning on the online channel. So those two, and vice versa as well. But that's a couple of steps further. That's the optimization of the total sales channel. If we look at the so the next thing then is to optimize for the ad spend, sales per product, and to calculate the ROAS. And it's actually to gather the data. Yeah. So you need to see what the media spend or media budget on your winner products is, what your return on advertising spend is. So it's pretty easy to make this analysis and the conclusions once you have the data. But today we are showing that. And also, as you're joining data, you can join some other attributes or performance indicators, for instance, the CPCs, the search volume, and things like that. So That's the main theme of the presentation. I will go into it, into the technical part shortly, but yeah. And then what follows is to adjust. So you interpret, optimize, and structure, and from the data it will follow what the best way to structure the campaigns are, what kind of budgets are needed, and what kind of return on advertising spend and return on investment is expected from these campaigns. So yeah, that's for the main part, for the basics about shopping. And now we can go into the analysis or the building out the model first. So in the end, at the build out, we will get a model like this. So we will have different products, their revenue, their shopping cost, or their media spend, their impression share, and their return on advertising spend. So if you look like the product A, you've got a really good return on advertising spend. So there you want to increase it further. On product B, it's also good. It's 400. The impression share is pretty big at the moment. So if we keep pushing it, we can expect that the competition goes up. So the ROAS will fall, but up till 80% it's probably viable. For product C, we've got ROAS that's not getting back we've got more costs than revenue. So in any case, either pause or pause for the moment and check out what's happening. Are the products good? Is the competition offering them at a lower price? Is it the landing page, the something else, or the product is not viable anymore? Maybe it needs to be discontinued. So these kinds of things are what you can ascertain. So building it out, what do we need? We need a couple of data sources and somewhere to combine them. And the data sources are actually the Google Ads ad spend, and also the impression share comes out of Google Ads. We need the sales per product out of Google Analytics, and this we will be taking out of the multi-channel funnel, and then combining them in Excel through Power Query. So let's first see how we get them through Google Ads. So you go for Google Ads and select shopping campaigns. And then the product groups and the time period, and then export data via a comma separated value or an Excel file. That means, for instance, here, just a second. So this is the report you will have in Google Ads. You will go to the product groups. You will take a certain time period. Your product groups need to be splitted on the article ID, and you will go to the download. If you don't have the product ID, if the product groups are not split up on the product ID, you can go to the user reports and create the needed report. You will take the article ID in the columns, and you will also take the clicks for the costs and the impression share as the rows. So it's the user defined reports, and then you can download it as well. So that's the Google Ads. And then the second thing is, how do you get it? And also, sorry for this, but actually all of our data is, how do you say it? It's under non-disclosure agreement. So I'm not able to show you this with a live example. Later, as we are joining the tables in Excel, I will do that as a live exercise. With Google Analytics and the multi-channel, that's the second report that we are taking. You will go to the Google Analytics, to the conversions report, to the multi-channel. sub-report, and to the assisted conversions sub-report. So it's here. So the conversions, the assisted conversions, and so the multi-channel funnel and the assisted conversions. And then you will go for you will pick Google Ads as type, transaction as the only conversion type, tracking period 90 days, and the primary as a secondary dimension as campaign and keyword. So that's this here. So the e-commerce is transaction. The Google Ads is the one, or you can take the all channels, but we need the Google Ads. You take the 90 days. That's the biggest period. It means you got here the time period from the 1st of August until the 31st of August. And these 90 days means that the funnel started, can be, for instance, for the 31st, it can be that it started on the 1st of, is it June? Yeah, on the 1st of June. And then 90 days later, it was bought. This transaction that was starting in June would fall into this assisted funnel. The primary dimension is a campaign. So here, Google Ads campaign. And the secondary dimension is keyword. Okay. And then we filter for shopping and export the report as a comma separated value. So export the filter out the primary dimension as shopping, and you take and you download it. It's export and then download. Yeah. So that's it about getting the tool. And now I'm gonna go into the live exercise. I hope everything was clear up until now. Just a sec. Yeah. So Friday and the exercise. Right. Okay. I hope you can see that. So the two tables that were downloaded from the Google Analytics and Google Ads, at the moment I have them both in one Excel. And these two are actually the ones that you need. So the first thing that I will do is to take them both, to take the whole table and to format it as a table. Okay, that's one thing down. The assisted conversion as well. Okay, Alstabella. Okay. Then you can go and do the, how do you call it? It's a Power Query. How do you say it? So you're doing the Power Query of, over this table, and you do it the following way. So I took this table and I say, give me the under the data part of the menu, give me it out of the table, and then Excel connects the table with the Power Query, and we will name this Power Query assisted just to have it properly. Assisted. Then we say, I don't like when he changes the type. He does that always. So save and load. So that's one down. Just a sec. Yeah. Okay, that was it. Normally it's a bit faster,
So we have here the Power Query, and it's shown in the Tabelle 1 sheet. So this is a showing of it. And we take now the Google Ads. We do the same thing. We do the Power Query connection. Tabelle. Yeah. We name it. Sorry, I don't have a mouse. I'm on a pad. So we name it Google Ads, just for the, and also not the change type. Okay. Schließen und laden. Save and load. Okay. And then we see if then we need to go into the Google Ads. So at the same moment, we have 94 rows in Google Ads and 48 rows in the assisted. Why is that? Because in Google Ads, we have more products than were actually sold on the web page. So, but I want to join these two tables, and I want to see all of the Google Ads added with the data that I have with the sales data. So I will go into Google Ads. Yeah. I will do you go to the Kombinieren or Combine. We go to the Abfragen, Zusammenführen or Join or Combine at the queries. Okay. And now we get into the menu. This is the first table, and I want the second table and the second one. So the assisted, I've got Google Ads and assisted, and I also need a key upon which I'm connecting the two, and that's the article ID. Okay. And when I have the article ID, I can also do, I'm doing the link left, the left outer join on the first table. So this is the left table, and I'm doing an outer join. So that means that all of the data in the left table will be still available after the join, and all of the data from the second table, from the right table, will be added where it can be added. So, okay, we do it like that. This part is actually SQL. If you want to know a bit more about the joins and different kind of joins, you can search SQL joins. Okay, so we've got here now the whole all columns were added, and we've got, I don't need a keyword because the keyword in this sense is the same as the article ID. I need the Wert or the value for the assisted conversions and Wert value for the conversions after the last click. Those two I'm going to add. And now you've got this data is added, and there where you have null, that means that there was not a row in the second table for this article ID. Okay, schließen und laden. And okay. So, and now we have in this table 2, we have the total part. We can now ask, so I could have done that earlier, but it's the same. I want to add these two tables, these two columns, because I want to know what the total conversion value is, all conversions. Okay, and I'm gonna add this one plus this one. Sorry, plus this one. Okay. And I have all conversion values. And at the same time, this is the, how do you say it? This is the
the values are in euros. Sorry, what was I doing there? Okay. Then we can go for, now I want to know what the assisted ROAS is, and why I'm calling it assisted is because that's one of the peculiarities about the multi-channel funnel, is that all of these assisted values are not actually the values that were generated in total. So if you would sum up all of these values, it would be more than you have sold through Google Ads in a month, because or in a time period, because this is here you get all of the, you get attributed to the campaign or to the product ID all of the touch points where it had with different funnels. But as we are trying to optimize more touch points, assisted ROAS is good enough for this exercise here. So we will take all conversions and we will take all cost. Okay. And this is actually the assisted ROAS, and you can see how it is being so we have between 2000, 20,000, 3,000, 1900, 1,000, and so on. So as a first thing, I would expect this to optimize for the bigger ROAS, but at the same time you need to see that some of the costs are pretty low, so we can segment that out. We can go for we filter out all the things that are underneath 49 euros, for instance. Okay, and then we see that the biggest ROAS, return on assisted return on advertising spend, is actually 3,000%, and yeah, going down. Okay, so that was the basic example how you do that. So we took the assisted conversions channel, a multi-channel funnel report. We took the Google Ads and we connected them. This can also be automated. It doesn't need to be done manually, but for the first step, it's also okay to do it manually a couple of times. Yeah. Then we have just a sec. We have the second part of the total of the live exercise, and that's actually another table. This one is already sold. It's the same table. So we have in the return on advertising spend, we have 3,000 here and so on. So the question is what to do for these return on advertising spends. I would increase the spend, for instance. All under 4, I would analyze further. Maybe let it run. Maybe not. Need to see. And for the ones that are under 1, I would under 2, I would decrease spend or pause. So either decrease spend or pause. So those are some of the main takeaways from the analytics. And now comes the additional info. So if you want to better your analysis, you can also add to the article IDs. You can add their gross margins. As a company, you have your own gross margins, and then
So gross margin is unit. So the unit costs of production and transport applied on a product level. There's a couple of calculations you can do it, but actually your accounting knows which one you are doing. And then out of the gross margin, you can calculate the gross profit. Okay, and so the gross profit is actually the conversion, so the sale value or the price multiplied by the gross margin. And then if you look at the gross ROAS, so we can take the all conversions here at this for this article ID 1470. We had 100 euros in cost. We had all conversion values at 3,030 euros. We have the gross margin at 0.28 or 28%. And on this sum of 3,030, we actually generated this gross profit. It's almost 850 euros. And then if we take this gross profit and divide it by the costs that because this is a better KPI than just the ROAS, we get the gross ROAS. Okay, so we get how much of the free cash flow is coming out of a product sale. And this means then that actually it's not about the return on advertising spend that you should be calculating. It's the return on advertising spend, but for the profit margin that you should be calculating, because then you know really how much of a product you're getting. So for instance, you can have 1,000 euros are coming in at 5% profit margin, or 2,000 euros are coming in at 1% of profit margin. And the first sense you earned 50 euros, in the second sense you earned 20 euros. And the returns on the advertising spend would be completely different. Okay, and if we look at it, the main thing it's actually then deciding is how much of a return on advertising spend you're able to how much of return on advertising spend in comparison to the gross profit are you willing to get, at which marketing costs are you willing to get so and so much profit. Okay, and I did two different examples here. You got the gross profit at so you got a certain article, a certain gross margin, a certain price, a certain gross profit. And for instance, if you want 1 to 3 return or 1 to 4 return, then you take the gross profit and divide it by 3, or you take the gross profit and divide it by 4. What that means that I'm willing to take 25 euros to get 75 euros, or I'm willing to give 18 euros to Google Shopping, for instance, in order to get 75 euros in return, in my gross profit. And these things then decide what kind of an expected return on advertising spend I want from my products and from the shopping campaigns that I'm running. So, and this is maybe the main point, because as you know, with smart bidding strategies, you're actually able to manage the shopping campaigns. So you take for instance these 10 products, the first 10, they have the ROAS grouping at 1 to 3, they are between 1,000 and 1,400. So this shopping campaign would have 1,000 to 1,400 return on advertising spend as a smart bidding strategy. Let's say 12,000, and you would take these 12 products and put them in it and just let it run. And when it's getting back
1200, you're not, you know you're getting your profit for the money you're investing. Also for the lower ones that have 750 to 900, 600 to 700, and so on. So those are that's the main point. So yeah, that's actually for the live exercise. That's it. Just a sec. I need to share the other part. My Freigabe. Okay. Just a sec. From the beginning. Okay, we came to the live part, and yeah, so that was the live exercise, the additional info. So as already stated, people structure their campaigns on product groups, bestsellers, and so on. We structure for ROAS based on profit margin on a product level. If you have any questions about this, you can always contact us. We can help you build this out. The info you need a product's price, you need the product's gross margin, and you either need your wanted company's ROI, return on investment, for the totality of your company, or if you want to know more about that, then you can go ahead and look up, for instance, cost of goods sold, KPIs like that. American companies actually normally operate on the ROI, and it's also dependent on the industry sector. But from the ROI, you can get your wanted return on advertising spend. So as shown, you take the price and the gross margin, you get the gross profit product. From the expected ROI, you get the expected needed ROAS. You get how much you're willing to invest in order to get gross profit. So what this relation is. And then you can add this data to your shopping campaigns, to your merchant feed, to your feed, and then structure group the products in different wanted ROAS levels. Yeah, so the summary, we had with return on advertising spend, we are able to spend more, we get higher revenues at higher profit margins, and the result is that we doubled the revenues for our customers, and also more than doubled their profits, because yeah, we are optimizing for the products that are bringing in more for the buck. Okay, so and that was actually it. We can now go to the questioning round. If you have some questions, you can raise your hand, and then I can give you the ability to talk. Is there anyone that has any questions? Okay. No? Okay. Okay, so if you have any questions, we are a 360 online marketing company. We do strategy, SEA, SEO, social media, web analysis, and different Schulungen. So consultations and expertise rounds.
We are located in Berlin, Billowstraße 66 D3. It's a nice area. You've got the phone here. You can contact me directly or on my email also directly. If you have if you want, also you can check out our newsletter, our other webinars, and the white papers. So check it out. They're a wealth of knowledge. If you don't have any questions, I think that's actually it for today. Okay, then stay healthy, and I wish you all a nice day and a nice upcoming weekend. Ciao, ciao.